Hello, everyone. Welcome back to the channel. Matt with Green Bar Trading and another weekly watch list video for you guys. I'm super pumped about this video. I think this is going to provide a ton of value to everybody watching it. Now, I've done my research. I have some really interesting picks for the week and also my market prediction for the NASDAQ, the S&P, the Dow, all of those, okay? Now, if it looks like I got ran over by a truck, I feel like I have, just getting over, you know, what everybody else is going through with colds and sicknesses in their houses, with their kids in school, and you name it. But hit the thumbs up for the video. I'm going to get into it all right now, but just take the 2 seconds to smash that like button for me. And if you're new, subscribe. If you're not subscribed already, get in there, smash that also, and let's get right into it. Now, before we look at and talk about the week, keep in mind, this is a very short week. You have the Thanksgiving holiday on Thursday, and trading volumes might be a little lower. I don't know about, the beginning part of the week. There is a ton of economic data. Just want to show you guys here, especially on Wednesday. I mean, this calendar on Wednesday is bananas, absolutely bananas, because they have to get in all this economic data since Thursday the market is closed, and there's just not much that's going to be going on past that. And you have the FOMC minutes at 2 p.m. on Wednesday. You have inflation, you have GDP, you have just a lot of stuff on Wednesday. So keep that in mind. And I just want to show you guys one more thing before we really get into the charts and my picks. This is the earnings for the week. Some more retail, some reopening type of stuff, but mostly just, a light week. Like I said, a very light week because of the holiday. So let's get into it and take a look at, we're going to start with the NASDAQ today. So let me just move this. Keep running out of breath. But if we take a look here at the last, I want to say 6 months or so, because this is important. This is really important. It's this bottom trend line that we have. And this is established way back into 2020. But if we take a look at this, and we also have a top end of this, very clear all the way from April. Okay, so if we take a look at this, because you can just tell, I mean, very bullish chart. There's nothing bad to be said about a chart like this. The only thing is, when you take a look at it closer, we can make very similar distinctions, which is what I love to do. I like to look back at previous patterns. They tend to repeat themselves. They don't have to, but they tend to repeat themselves. And what I found here is very interesting. So I'm just going to pull up the RSI, because something like this that, it's kind of like a coincidence, but it's not. It's just the way the market is trading. There's a lot of algorithms that trade the market now, especially on these really high cap growth tech stocks that have been running the market lately, literally running the market. I'm just going to close this down for a second so we can see a little clearer. First, I do have to say that there's an advanced decline line. It's something that I look at on a weekly basis, and it shows the amount of stocks that advance to the amount of stocks that decline. And it has a chart. So just like this, the advanced decline line will show up on the chart as well. The interesting part about that is for the NASDAQ, now this is the QQQ, this is the NASDAQ ETF, the advanced decline line actually looks something like this. It goes up and then it's starting to come down even though the market is going up. Now, why would that happen? Why would we see more stocks declining in share price versus advancing when the market is making all-time highs? That is very simple. That answer is because the big FANG stocks are the stocks that are leading the market right now. This is not a wide market breadth type of stock market move. This is a move in the market that is very, tight amount of stocks that are moving the market. So we want to see a market that is all inclusive to many different stocks. And that's when you have your healthiest stock market. Right now, we're not seeing that. We're seeing the Amazons, the Googles, Facebooks, Microsofts, Apple. Those are the stocks that are pumping up the market. Tesla pumping up the S&P. It's just, kind of not great. You want to see a better market breadth, and that's not what we're seeing right now. So with that out of the way, we're in a very clear channel here on the Qs, on the NASDAQ. I have the RSI expanded up here for a reason, and I'm going to get into that right now. The last time we bounced off the bottom trend line, a trend line that has gone back 18 months. I mean, this is a legit trend line. And over here, this is when we were telling people to buy. You want to be buying in a hot market when you're at these support levels. And since then, we've gone up to the top end. Now, if you look here, the last time we were at this bottom end, watch the RSI. So we got up to here. You could start to see at the top, we were at about 77 on the RSI, and we stayed there. This is something I pointed out last week. I said, this is something that we can stay at for quite a bit of time. Coming from the bottom end, we tended to trade sideways for a little while. I said that right here. That's possible to happen again. But take a look at this. So we went from the bottom to the top. What looks very familiar to you? It's this V right here, right? The same thing happened right here. You had a drop. So you have the drop when we got to the top of the channel. You got a drop when we got to the top of the channel. And then up. You got a drop here. And then up. Now, the only thing is, once it got up to new all-time highs, which is what it's doing right now, that was basically the high for the next, I want to say, if I'm doing it right, about a month. So we traded sideways to down a little bit for the next month, and then we dropped to the 50-day moving average, found support there, and then ripped up to new all-time highs to the top of the channel again. If we do that again, okay, we had our pullback, we're back up. Now, the last time we got back up here, we had a couple of green days and then one big drop. So we went to 359 to 368, almost a 9-point swing on the Qs that day. I don't know if we're going to see that type of volatility, but being up here is definitely possible. It's possible to see that type of stuff. Now, when that does happen, these are buying opportunities. The only problem is when this one dropped to the 20 EMA, the 20 EMA now sits well below where we're at. So what I'm trying to say is the extended nature of where we're trading at right now, over 7% off the 50 moving average is incredible. Okay. So would I be suggesting to go long the Qs right now? No. At the same time, would I be suggesting to short a market this hot? Absolutely not either. So where does that leave us? If we can't, go long here with tech stocks and we really shouldn't be shorting such a strong market, what do we do? Well, that's up to you guys to decide overall. There are some really hot momentum stocks that are still, going, but I would just suggest to be a little more cautious considering we have a very similar RSI setting up here. And when we did hit here, we eventually pulled back to about 46, but it took a while. It took about a month. We pulled back to about 46. We're currently at 73. If we pulled back to 46, you're looking at, closer to the 50 moving average. I don't know when that will happen. I don't have a crystal ball. I could just go on technicals, and we're at the very top of this channel, a channel that has really been pretty consistent. So, I just wouldn't be going long the Qs right now. That doesn't mean that I'm not going to be buying, tech stocks, or if those, they're still some of my best picks are still in the tech sector. So, we'll still go over that. Going through to the SPY next. Another one that, was at the top of this very consistent top end of the channel here. RSI extended. This is all, it's the market we're in. We're in a market that is super hot. Now, in last week's video, I said there's a possibility after the pullback that we can trade sideways. And that's what we're doing. We tested to see if we could break new highs, tested again, tested again. We cannot seem to get over the high. We beat it by a couple of cents, but that doesn't count. I mean, we literally pulled right on back. A couple of dollars a share sucked back after we just breached it for a second. This tells me that there's no conviction to be buying up here. We saw the pullback. Was this the time to buy? Yes. You should have been buying here. We got to the top of the channel 2 weeks ago. We called the pullback, got the pullback. Then we called the sideways action. That's what we're seeing right now because we've seen it all before. When will we pull back? Will we pull back to this 50 moving average that we have seen as very consistent over the whole course of the year outside of this, nice correction that we saw, which wasn't even that big of a correction, but we have pulled back to the 50. I don't know why I just did that. Hang on. And the 50 now is a long way away. So I'm not saying that's going to happen. I think more of this can happen, which can make trading up at these levels a little more difficult. So instead of focusing on the SPY and the NASDAQ, I want to focus on something that might start to see a rotation into. Let's see if we can see a rotation back into the value plays, even though we're seeing, lockdowns. If you read into it, they're not even really lockdowns. Like Austria went into a countrywide lockdown, but you can still go to school, work, everything else. So I don't know, how serious lockdowns are going to be, in the future. I think people are kind of like, all right, we know how to live with coronavirus now. There's no way we're going to be going into lockdown. There's so much medicine now. They know how to treat it. I'm just not afraid of COVID lockdowns anymore. I do think they can hurt supply chains that don't need that right now. But other than that, I think this provides a pretty good opportunity to get into some of these stocks. In the Dow, we saw a nice breakout, and now we're pulling back to that previous level of support here. This could be a good area, to get long some of these Dow stocks, some of these value stocks. And I have a couple of retail stocks on my watch list for this week. You have the 50 moving average at 352. We're not far off that. We've seen support there before. So we'll see if that happens again. But I do like this retracement. We kind of have been selling off for, 2 weeks or so on the Dow. And I'm looking for bargains. I don't want to be chasing, NVIDIA, Tesla, AMD, these stocks, EV stocks that have really made their moves. It's great to get in those when it first happens, but I don't want to be someone buying at the top, waiting for it to cup and handle, and then a couple months later getting back to my highs, or maybe, a couple of weeks in this type of market. I want to be looking for some decent deals if I could find them. So that's the Qs, the SPY, and the Dow. Now let's go into my picks for the week. So what I'm looking at, and we'll start with Crowdstrike. And when I'm doing picks like this, I'll always look at the daily chart. I'll always have up on my chart the 200, I'll have the 50, I'll have the 20 EMA, and this is where I do a lot of my technicals. I want to see, where the stock is coming from, where it goes, where it's seen clear resistance, and where it's seen clear support, okay? The reason why Crowdstrike is on my watch list, not just because it got an upgrade to $320 a share, because upgrades are just that. I mean, it doesn't mean that it's got to go to that amount. Everybody has all different prices what they think that stocks should be. But Crowdstrike is in a very solid sector, okay? Everybody is going to need cybersecurity if they haven't already, but this is a very good company. And I like the fact that it's by support. I feel like if I could get in around support, it's a lower risk entrance, okay? So if I could get in for a low risk entrance and then set a stop that's not far below some of these trend lines, you don't want to be right at the trend line because sometimes they'll pin down and then go back up. But I want to get in at something like that, a nice support level, because look at all the room you have to get back to previous highs. From here to up here, you're looking at almost just over 15% return on investment. That is what I love to see. So if you want to trade something like this, you might be able to get options, buy for a month, 2 months out. And, just in case you do trade a little bit sideways, you can be involved for the move up. But this is what I would want to do. I'd want to go long at support. This is a trend line, clear support trend line. So Crowdstrike, that's our number one. American Eagle. Okay. This company, I feel like, has been doing very good things. They have earnings coming up on, day is that? The 23rd, so Tuesday. You have earnings on Tuesday. The only thing I got to say is this to me looks like it based out. Very clearly looks like a cup. If I can draw a circle or whatever this is called, a half circle, is perfect. I mean, to the number, this is a cup, a very nice base, with a cup and handle type of formation like this, you want to see a longer base. The longer the base, the less likely you're going to get selling with a pop, because a lot of the weak hands have already gone out of the stock. So this is setting up really nice. You got the cup. Now you have the handle building up, and you have earnings coming up. I think, without a crystal ball, I think their earnings should be pretty good. And what they're going to say about the holiday shopping season, I think, is going to be pretty good. I think a lot of people are going to be spending a lot and buying early and buying more often this holiday season. How long does it last? I don't know. But this technically is a very nice cup and handle formation. The handle forming pretty close to the 20 EMA and the 50 moving average is also a very nice setup. So that's why AEO is on my watch list. Next one up, Facebook is still there. Facebook is still on my watch list because now, to me, it looks like it's consolidating right here. Is this a, bullish candle? Not really, because you hit highs here of 52 and closed all the way at 45. So that shows a little bit of profit taking into this move. It looks like there's some sellers up here, but it's still holding up. We're still holding up over the 50. We're over the 20 EMA, which is a very bullish indicator. We broke under the 200 moving average and just reclaimed it right away. I like the way that this is setting up. I do think we're going to see this, 350s break. I don't know when, but as long as we hold up here, I think Facebook is looking pretty good. So we got that. Let's take a look at ASO. Has been a stock that has been on my watch list. For those of you that follow me, since about $14 a share, $15 a share, I have absolutely loved this stock and this company. Well, now we're in a clear channel, just like we have seen in the past with other stocks, other indexes. This, we called the breakout. We had this very nice breakout and came right up to this top of the channel. They have earnings coming up, and I think their earnings are going to be really, really good. But we're at the top of the channel. This is a little bit extended right now. We're extended off of the bottom trend line. I wouldn't be a buyer here, but I just wanted to show you how, this stock has really broken out. This is a flat top breakout. It's done everything technically sound. I would be so bullish this if it wasn't into the top of this trend line right now. It's pretty much respected everything, and I have to respect the technicals on this. So ASO is not something that I would be a buyer here. It's extended, but if you were buying it when we were saying to buy it, this is a very good time to either be taking profits, trimming some positions, ahead of earnings. And that's, something that I always have on my watch because they have done such a good job. Now, looking at Airbnb, saw a huge gap up. This is why you don't want to be buying 1-2 days out, at 212, and then it trades all the way back to 190. But this is consolidating. This is something we see with this stock. This stock is not for, somebody that can handle just big swings like this. But now we're at the bottom of this consolidation at 190. Came off of that pretty nicely to close at 196. It was still down almost 4% on the day. Does this give us, an entrance yet? I don't know. I do think it's got to be ripe for this breakout into new all-time highs. So this is why Airbnb is something that's going to remain on my watch list. I want to see if I could get into it for a break of all-time highs, because then you're in a blue sky setup and the sky is the limit. There is no overhead resistance. There's no overhead supply dragging anything down. There's just demand, and these things can get going. So we'll see how that one, starts to act. It's sort of a reopening type of play, but we've seen this rotation. So we saw the rotation back into tech, hardcore back into tech, like you see with the Qs just rocketing, and you saw the Dow going down. Let's see if we could get that rotation back into those stocks. You want to be in them before they move. So that's Airbnb. And then let's see, I got one more here. INMD. This is Inmode, a very nice chart. Really, really nice chart. Very good company. This is a nice looking stock that is really consolidating, and we're right at support. Once again, what I say is, excuse me, is getting something that is close to support, and the 50 moving average right here can also be an entrance if for some reason this breaks. The 50 has held up this stock the whole way. So you have a low at about, I want to say 83 would be the low on this, but it is definitely, seeming to be holding up here. We'll see how the stock acts this week, but this is a nice consolidation for maybe that next level higher. So that's why this is on my watch list. I like stuff that I could get at a good price instead of chasing at 100. Well, if I could get it at, 88 or 85, I feel way better about things. A higher, you have at this point, you'll have a better return, 15%, instead of buying too high, getting stopped out before the move actually happens. So that's it, guys. Let's see, how many picks did I have? 1, 2, 3. About 6 stocks, but 5 picks. We had Crowdstrike, AEO with the nice cup and handle. You had Facebook consolidating after a breakout, ASO, Airbnb, and Inmode. So those are, my picks. ASO, it's already at the top of its trend line. Would I be shorting it? Probably not, because I think it's very strong. I don't want to be shorting in a market like this. So we're going to stick with those 5 picks: Crowdstrike, AEO, Facebook, Airbnb, and Inmode. That'll be our 5 picks for the week, and I'll post them in our Discord with the charts, the breakdown, the trade plans, and everything else. I hope you guys enjoyed the video, and please hit that thumbs up for it. See you guys back on the next one. Take care, guys.